Good evening, traders. It is Sunday, the 11th of January 2015. We'll be doing a daily trading recap of our key setups. I'd like to welcome you here. Of course, it's been Sunday. The E-minis, which we trade on the after hours markets, opens Chicago time 5 p.m. 3 p.m. in LA, and it is 9 a.m. or 8 a.m. one or the other. No, sorry, yeah, 9 a.m. in Australia, down under. And of course, it's a very popular market in Southeast Asia. But being Sunday afternoon, we still get some fairly good volume being traded. So let's go through our key setups, and I've also had a number of our traders have sent questions in, which I'll also answer. So we can see here we've got quite a busy chart in front of us. So let's look at our first setup of the day. We had what we call our T89. Our T89 we can see is very well extended out of our channel. We've had our zero lag confirm the trade. We also then had a T69 channel break, and away it went for a good 2 to 1. Now, one of the questions I've got, which I may as well answer right now, is a number of traders have asked us, particularly our newer traders, what's our average daily target. Most of our traders are targeting $200 per day per contract they trade at a maximum risk of 2%. Now, risk management is one of the most important factors, of course, in trading. And if we really consider trading, there are three key things: psychology, which I personally believe is 90% of trading; money management, which is 5%; and of course the trading setup, which is 5%. But the biggest thing is our psychology. So follow your rules, traders. And I just had a trader write to me earlier this week. He's in the hole again because he keeps moving his stop. Stops are critical, traders. Do not move your stops. Anyway, back to the chart. So you can see we had a T89, very nice winner. Now, as a reminder, also on the T89s, a T89 trade is perfect in a slower market. In fast moving markets, do not trade them. You will be stopped. Yes, it'll eventually turn, but of course the T89 is a counter trend trade, so you want to wait for the right market. So in a slow moving market, they're perfect. The after hours market, and that's one thing about our friends here in LA, come 3 p.m. of course they can do 2 or 3 hours of trading and pick up some very nice T89 trades. So we had our channel break, very nice 2 to 1 risk reward. What you can't see here is we bounced straight off a pivot. We had another T89, which is let me just mark that up for you right here, and you had your entry right there. Now remember also, with your T89, you're waiting for the zero lag to confirm. Okay, so you must have confirmation that the zero lag, and we can see here it's changed color and we're in. Our target on these is between 1 and 2 points per trade. The further out we are from a channel, the higher our profit target. We then had a T2, and we can see back here we had a T10, which is perfect, a T2, another winner, and our T7, our nice double bottom, which is also a bounce off the pivot. You took a little bit of heat, it went sideways, but of course your stop was 1 tick below the low here, so you were not stopped out. You then also had a T10. We can see our rising long-term stochastic, up it goes, and a T69 as a separate trade, and bang, popped up very nicely. Up here we can see we had another T89, which is a very sweet one as well. Remember, and this is one of the questions here, could I please explain angulation once again? Well, here we've got perfect angulation on this trade here and this trade here. Now, angulation basically is where we have our zero lag is moving away from our channel, forming a wedge, and we can see the wedge here, or the angle as it's moving away, and that's moving away very nicely. And remember, we are not entering until the zero lag changes color and confirms the new trend. And here it is here. Your entry was actually here. Now this is a beautiful 4 or 5 point move on this one. Realistically, following your rules, you would have been probably out with 2 points, and then you get once again another T69, and away it goes as well. So you've got two trading opportunities right here. We've got further down, we've got here a T10. We can see here our long-term stochastics falling away. We've got a nice cross. We're in on the close of a candle, and that happens to also be a T1 trade. You would have actually been in on the T10 first. If you took and waited, and if you're trading the T1s, you still would have picked up 6 ticks very nicely on that particular trade before you had a lovely double bottom form here. And on top of that, look at our custom MACD. Look at it sloping up beautifully for divergent, perfect double bottom as we've got it over here. One thing I missed out was talking about our T9s. Our T9, we had a winner, a winner, a winner, and a winner. Now on this one, my apologies, using a 6 tick stop, you would have been stopped on this particular trade, so I apologize there. But of course you will back in on the trade right here with your T69, the channel breakout over here. So let's move along here. And by this time, it's in Chicago here, it's getting rather late. It's 1 a.m. in the morning. We've got a lovely breakout, another T69 right here, a T10. Why is this a T10 and not a T2? Well, see, our long-term Stoch is still rising. Now our zero lags confirming a trade. So we had 1, 2, 3, 4 winning trades in a row there. Here we had a T9. If you had have taken the T9, you would have been stopped. But what are the rules of the T9? You want to see price gapped away from the channel. You want to see angulation. What have we got here? We've got here, it goes straight up. It is so we can see our channel running along with our zero lag. There is no angulation, so you would not have taken that trade. Remember the rules, you must have angulation. Here we kick back over, we've got a T2 set up, and we would have entered on this candle. Why this candle? Once again, we wait for the zero lag to confirm the trade. Now down here, I've marked up another trade here that you would have taken. That is, we've got a very strong trend. Here I've used the fractal as an entry, or you can use this small quick down. I have another custom indicator that I also would have put me in here. Basically it's a smooth stochastic that got me in there as well, but we can see here that was a very nice entry. So overall, on Sunday the 11th going into Monday morning, it was a real kick butt day. It was a typical trading day for us. We only had a couple of stop outs. We had over a 90% win rate today, and it was a very good day. And for those traders that do not trade the after hours market, I would strongly recommend you consider it. As much as we may only trade 40 to 60,000 contracts on the E-minis during the day, we do get some fantastic trade setups. So quickly look at the questions here. One of our Peter, one of our new traders, could I please just go over the targets? Our target is 4 ticks minimum, ideally 8 ticks, and that brings up the other point, is that the further out of a channel you are, the more likely you are to have a pullback back into the channel. So the channel acts like a magnet, so you'll want your entries to be as close as possible on or in the channel. Too far out and you're going to get a pullback. I explained angulation. Good question, how do I stay out of chop? Well, if we consider here our 89 MA, the long-term moving average, as soon as that starts to go sideways I get concerned. But also you'll notice our channel here, and when the zero lag is caught in the channel, we don't have any real chop here to talk about today, but when we see our zero lag caught in the channel, you want to wait for the zero lag to break out. Now here we had a perfect T69. We had one here. Remember, we're trading the first break on the channel breaks, so you can see here you had one there, one there, one there, stopped, and one here. All were good for 2 to 1. So here where you have a small one here where we're down 6 ticks, all of these are returning you a good 8 to 10 ticks per trade. Now there, just to recap then, when you see a zero leg caught in a channel, be very cautious with the market. And I tend to find on Sunday afternoons we tend to have some very nice trends anyway. I think some of the professional traders in the US do get on the screens, and we tend to get some volume there. Let's see, how much do I charge for all of the indicators and the training videos on my top 10 setups? Simon, it's $497. So I charge only $497 for all of the indicators and the online training videos on how to trade the various setups. So we have around 10 main setups that we trade. However, let me bring up one other key point. Become a specialist, not a general practitioner. Who owns the big bucks? Your local doctor, the GP, or the medical professional? Most medical professionals, of course, practice in one area. It might be cardiology, might be brain surgery, whatever area they practice in. They don't go and see people that visit them with colds and other bits and pieces. They're specialists. I bring that up because I still see traders trying to trade all of the setups. Now, as you gain mastery of one setup, move on to another, but I strongly recommend you never trade any more than 3 different setups, because the mind can only think of so many things and you can only do so many things at once. And trading the 144 as an example, you get so many trading opportunities during the day that you don't need any more than the top 1 or 2, maybe 3. But seriously, for all my new students, start off trading the T1 and nothing else until you master that, then move on. And we're going to talk more about that on the new psychology video I've got coming out in a couple of days time. But I still see traders that lose money that are coming to us because they're trying to trade too many things and they keep looking for the next best thing, etc. Remember, with these setups that I'm training you in, you will never need another setup. And just the last question before we sign off for the day, why the ES144 tick? Well, with the ES after hours, I tend to find that the 144 tick, we get sufficient volume and movement, and we can easily get our fills and to get into the trades on limit orders. Start to get up to the 550 ticks, which is what we trade during the day, where we've got, of course, lots of volume, 1 million to 2 million contracts trading. You can trade a much higher time frame. So during the day we trade 550 ticks, with our anchor chart being the 2000 tick. During the evening and early morning, during the Australian and Asian session, we trade the 144 on the ES. Of course, one of the other favorite charts and markets that we trade is the NQ. During the day, 133 tick, but we generally don't trade that during the evening. We just don't have the volume. So traders, time is up, and I look forward to giving you our next trade recap in the next day or so. Cheers. Thank you.